Thank you for mingling. I hope that all our technical difficulties are figured out. We are going to have 14 different groups here today talking about how they do their stuff. Brianna, can you turn off your camera and your mic at the moment so that I can? Yeah, good. Thank you. We have 14 groups. Those groups are both Angel Groups and MicroVCs. And to set the stage for us right now, we have Elaine, we're SAC alumni. So Elaine, could you turn on your mic and camera, please? There we go.
I'm here.
Cool. So I'm going to step off the stage and let you tell us about our startup ecosystem a little bit.
Oh, fantastic. Thanks, John. Hi, team. I'm Elaine Werfley. If you don't know me, I'm super excited for the powerhouse panel that we have today. I am lucky enough to know many, but not all. So I'm excited to meet new faces and very excited to be reunited with others. But today, before we get started, just wanted to give you a quick view at the early stage company funding landscape, a look at our local ecosystem. John has asked me to share just a sneak peek of what I'm seeing from the hot off the presses 2019 Halo report that was released today. It's authored by the Angel Resource Institute in combination with PitchBook. And for 2019, they've looked at and analyzed almost 2,500 deals, of which angels have been involved. And to kind of just give you that zoom in view of our Pacific Northwest, of all angel-backed deals in the US, 9% of them are located in the Pacific Northwest. So that kind of gives us a scale of what's happening in our upper left corner. One of the slides then that entrepreneurs are always interested in hearing from talks is the capital life cycle. And what I wanted to share with you today, both from an entrepreneur perspective.
We're not seeing your slides.
You're not seeing the slides.
Did you hit share screen again? There we go.
Do you guys see that now?
Good.
Okay, great.
You might want to back up and look at your previous slide if there was one.
I can do that. So this was the visual that goes with the 9% of all angel groups being located in the Pacific Northwest from the Halo report. And so when we think about what happens in that 9% of the deals, when we think about it, there is a capital life cycle ecosystem. And there's a lot happening on this slide, but as from an entrepreneur, you guys know this very well. It comes from going from through different gates of as your early stage company is going through customer problem fit, problem solution fit, problem market fit, understanding product channel fit, and how to scale, right? When we think about the funding stages that you go through, we talk about pre-seed, seed and startup, and Series A. And those are the green boxes that we have here in kind of highlighted as we move from left to right through this life cycle. And one of the things that we want to talk about today with this powerhouse audience that we have of angels and micro VCs and funds is talking about where in this capital life cycle do they play a role and do they play a part? And so usually what we're seeing here is that the angel investors and micro VCs or VCs interested in seed stage come first, and then there's larger venture capital. But if we drilled into this number one box, we would actually see that there's still more differentiation that we want to talk about. And here in Seattle, I am lucky enough to work with all of these angel groups on an ongoing basis. So we have SWAN, Seattle Angel Conference, Grubstakes, Puget Sound Venture Club, Element 8, Alliance of Angels, SeaChange, and Keiretsu, all of which are represented here today, which is so fantastically exciting. And these angel groups have done a fantastic job of sharing with us their top line data so we can understand a little bit better how the ecosystem that we see through angel groups fits together. And one of the most important things as an entrepreneur when you are starting to look for that life cycle of investment is to be looking in a strategic way and looking for your best match. So there is a need to understand if these groups are focused on a specific industry, like Element 8, which is only focused on clean tech, or if the groups are interested in a specific, because you don't necessarily want to go to a group too early or too late. So you're looking for that right. So if we go and we look at in calendar year 2019, how the deals, number of deals, and average check size that each of these angel groups wrote, what we see, oh goodness, hold on, we got to catch up to the right slide. What we see is that there is a group here on the left, which is writing checks that would be $300K and less. And then we see a group to the right that is writing $500K checks or more. On here on the left is the number of deals that the group is involved with. So you can understand how many checks they write per year. And so when you think about the capital life cycle, what I really want to impress upon today and have for the discussion of the groups is how we all fit together and what we're looking for and differences that we're looking for. So when we look at that sequence, and as an entrepreneur starting out, you are looking for your seed or your pre-seed money, which means you would go to the groups here on the left, Grubstakes, SWAN, SAC, Element 8, Puget Sound Venture Group, to get that first round. Because what we're seeing is AOA, SeaChange, and Keiretsu are looking more on the next stage, that Series A stage. So it would be great as we have the discussion of Ask Me Anything, if there is interest in entrepreneurs to kind of understand that chain of events so that you know which group to talk to at the right time. The other thing that I think we want to tee up to talk about is today in the 2019 Halo report that just came out, it totally highlighted the fact that the landscape for angels is changing. And so if the landscape for angels is changing, the landscape for entrepreneurs seeking funding is changing. So we're seeing the emergence of micro VCs and additional incubators and other funds and larger geographies that need to be included in the dialogue. So that's where, when we talk about new faces today, So we also have the Thai Fund here represented with Harish. Bellingham Angels is now in the conversation and can't wait to hear how they would place themselves along our bubble chart would they be in that seed, pre-seed, or that next side of our Series A group. And then lastly, but certainly not least, is the group of micro VCs where we have Ascend and First Row and Untapped in Essence to be talking in the conversation and how they play a role. So I'm super excited today for everybody that we have on this slide today to come together to talk about their views on funding, what they've seen change in the last couple of months with COVID, as well as what opportunities they see moving forward. So with that, John, I'll turn it back to you.
Thanks so much, Elaine. I really appreciate that. And it's really great that you spend the effort to help collect all of the data and put it all together. It's a rough task to get actual meaningful data from all of the groups. So if I could have all of the guest speakers turn on their mic and turn on their camera, that should get you on stage. And then Elaine, if you turn off yours, you can drop off stage.
Thank you.
And then I see a couple of people in here that I probably need to hand add to the list. So while I'm working on that, we have a bunch of people. In fact, all of the angel groups agreed to participate. Now, I'm hearing a little background noise from someone. They have a fan going in their room, maybe. So if we can turn off your mic a little bit, think, who was that? The last person turn off the mic is the one that has a fan. All right. We had everybody say they were coming, so we'll work on that. I have a couple of people I see in there that are not logged in based on their, it looks like only 6 people can turn on a camera. They say, all right, well, in that case, I'm going to go through and talk about the people that are here, and then we'll have you turn off and we'll go do the other group. So let's start with Gary. You are at Puget Sound Venture Club. Can you tell us a little bit about that?
Okay, well, we our market is the product's done and they're looking for go-to-market money, except for medical, and we do quite a bit of medical, and obviously the products take forever to get done. I'm getting back. John, are you here?
Yeah, I get a lot of echo too as well. Yeah. I think that's a function of how your speakers, that's why I've got headphones on. So we probably should have done a tech check before we did this thing.
Yeah.
So you're the oldest angel group in the area. You write a bunch of checks each year.
Well, we did 7.7 million last year, and obviously we'll be down this year.
No, that's not necessarily obvious. I'm going to ask some more questions about that, how it's adjusted, how different people are adjusting from where they're going. So let's go on to Haresh. Haresh, I'm having a hard time finding your website for your fund. So maybe you can tell us about this Thai fund that is supposed to be out there somewhere.
Sure, John. I think that's the first thing we need to fix now. Go back and figure out what's the problem with the link. But I just clicked on it. It seemed to work.
Maybe you can post it into the chat for us.
I will definitely do that. But thank you for having me. This is the most wonderful annual event in Seattle, one of the best we have for early stage companies and entrepreneurs. So Thai, as we know, is, for some people who might not know, is a non-profit organization with the charter of promoting entrepreneurship through programmings and investing. We have a bunch of community programs and workshops, educational programs, and the fund that, John, you're mentioning now is the ZFi Catalyst Fund, which got morphed from the network we had before that, Thai Angels Group, Seattle. More of a network. This is an actual fund with a focus on B2B startups, early stage, again, in the space of cloud, AI, ML, SaaS, IoT space. Slightly later stage, it's still early stage, but slightly more established companies we invest in, bigger checks. It's a one check from the fund itself, unlike the network where individual angel investors wrote separate checks. So we invest about $500,000 for about 10% equity in the companies in the space that I just mentioned. We still have individual angel investors within the group. We still are quite active in early stage individual network type, not really network type, but investments in early stage as well.
And how active have you been this year?
So this year, it's a little tricky. The fund has not made any investments. The last one we made was last year, which was in a company called CoreStack. The CoreStack, we closed a Series A round, which was when Thai came in at an earlier round. Just this round was about $8.4 million that we raised, a valuation of $40 million. This year has been a little tricky from what we've seen. Early stage companies are really kind of having a hard time trying to find angel investors. But slightly established companies like CoreStack, where we have licensing agreements with companies, corporations, we are still doing okay, and we've seen a little bit of growth in our revenue as well. So in terms of investing, individuals have written checks. I've personally written 3 checks in the last 4 months. So it's a little ironic. I don't typically do that in a year, but here in the time of pandemic where I wasn't expecting any checks, I've actually done that. So.
Yeah, all right. So Javier, can you tell me about what you're working on?
Okay. Is a network of like-minded people. So many of us come from Seattle Angel Conference. We work in Seattle Angel Conference in one of the cohorts. We got to meet each other, work with each other, and we decided to continue after SAC, helping each other to do due diligence and contacting with funders and helping funders. So that is Grubstakes. So we write individual checks, but sometimes if there's a lot of us who we create a syndicate that is managed by one of us. That way we can pool more money together and we can do things more efficiently. So we do kind of 4 syndicates a year, usually. So this year has been kind of difficult. March was a big stop in terms of deal flow, in terms of interest. There was a lot of uncertainty, and that stopped a lot of people from wanting to write checks. But in the last 2 months, we have seen much more activity. So I think that we are in the road to recovery and to getting to a new kind of normal again.
Okay, cool. I'm going to try an experiment. Gary, can you turn off your camera, please? Dan Rosen, can you turn on your camera? Almost. How about Eric Watson? Can you turn on your camera? Oh, that's much nicer. Somebody turned off their fan. I like that. All right. That's interesting. I'm not sure how I'm going to pull more people up to the stage. We're going to work on that. All right. So E8, Jeff, can you tell me the difference between E8 and the E8 fund and what E8 does that's special and so forth?
Sure. And for those not familiar, E8, which originally was Northwest Energy Angels, we've been around for over 14 years, and our members have up till now put in about $40 million in over 100 transactions. We are industry focused. We invest only in clean tech, although that's very broadly defined to be renewable energy, energy efficiency, ag tech, water treatment. And in addition to the individual checks that our 80 plus members write, we also 3 years ago raised our first associated venture fund, which is now fully invested with 9 portfolio companies. And we'll be looking to raise a larger clean tech fund towards the end of the year. As far as how activity is now, I haven't collected the most recent data, but the current pandemic, of course, coincided with our normal summer slowdown, but we've had very active participation. And I don't know how the other angel groups are doing their meetings now, but relative to the attendance that we used to have at our monthly lunches, we've had about a doubling of attendance in our Zoom calls, which is very, very positive. So we're a very engaged group, and to the extent we see quality deals, I think we're going to continue to be pretty active on check writing.
And so you don't see a problem writing checks with no visiting of the person in person?
That thus far hasn't been that big an issue. I think anecdotally, talking to a number of members, and I guess I would fall into this category, I'm keeping a little more dry powder for my existing investments and not quite as ready to write new checks.
Yeah, all right. Fair enough. So Kirby, can you tell us about who you are and what you're doing?
Sure. So I run a small venture fund focused on the pre-seed stage, which I would define as companies raising anywhere from 500,000 to 1.5 million. Ascend.vc is the name of the fund. And I operated startups for 20 years before starting the fund. Typically, we write checks 100K to 250K. We have 22 companies in the portfolio right now. And we focus on marketplace, e-commerce, and B2B software as categories. So we leave the clean tech to Jeff and the med tech to Gary. And yeah, I guess the reason I started the fund was I saw a gap that was, as the presentation showed, a capital gap here in the region where, the standard venture capital firms would wait out an entrepreneur until they really had Series A traction just to give them a seed level check. And then at the earliest stages, felt like there was an opportunity for someone who had operating experience with startups and had raised venture capital before. And we IPO'd a couple of times and sold companies and failed miserably at doing a lot of things to come in and help founders avoid the mistakes that I made. And so that's what I'm here to try to do. Thanks for having me. John looks very stoic, and so I've either just stunned him with my wonderful words. I have this effect on people. They just freeze.
The structure of Sorry, try that again. So can you hear me
now
correctly?
I can.
Yeah. So since you're the first micro VC talking, can you sort of frame where a micro VC is from between an angel on one side and maybe Voyager and Madrona on the other side, so that people can sort of frame where the conversation should be?
So I think of a micro VC as the first institutional capital that can come in and really help an entrepreneur get to their seed round. So if you have angels, often will just bet on the individual pre-product, pre-prototype. That's kind of a typical friends and family stage. Once there's a product, a prototype, maybe concept, something out in the wild to look at, and I would say if there's some signal, I don't invest in traction. I don't think micro VCs generally need traction, but you need signal. You need a reason to believe that traction's on the way. And that's where the micro VC plays in between the angel layer, I think, and the bigger institutional capital layer. But that's my view on it. Again, I think we're all unique in terms of fund size and check size and philosophy. But I think in the ability to catalyze a round, bring other institutional investors into the round. A lot of times I'll start out by leading a pre-seed, and a founder might take that and actually leverage it into a seed round with a bigger check than mine, which is great. I've done my job to be helpful. But so yeah, ability to catalyze a round, check size, and sort of value add, and helping them get to the seed and Series A institutional rounds. Like a technical venture, filter on everything, as a which can be good and bad.
Right. So you're investing a little bit below where the institutional VCs are playing, and hopefully in the same mix and maybe a little higher than where the angels are playing. Although some of our angels are
exactly, that's where it's wacky.
Like you're playing.
Daryl and Mark, from Zulily fame, will write $2 million checks, and and a lot of times I just led around where 3 brand name local VCs who typically write seed and A checks wrote pre-seed checks, and it's getting it's getting very fluid in terms of cross stage investing, which I think is great, actually. Like, the more the merrier.
Yeah. So can we get an introduction to your daughter?
Ice cream after you say hi. Sorry, I've got my associate here.
Hi.
Okay. Thanks for having us.
That's wonderful. Thank you so much. So Minda, you've jumped into this recently.
Well, it's been really interesting. So
going?
Yoko and I, after having been fund managers at Seattle Angel Conference, kind of caught the same bug that Kirby described, which is finding that gap in the market that micro VCs can really play a role in. And we care so much about our ecosystem, having been operators, and then Yoko doing a lot of angel investing, me sort of getting involved in that space to sort of learn and see where investment played a role in growing startups. And so I think it's really exciting to see more micro VCs, not only here in the Northwest, but around the country. And I think we're all differentiated in a lot of the same ways that angels differentiated, which is like slightly different check sizes, slightly different focus, slightly different value add, but really all there to sort of be catalysts. Faster, larger checks than angels typically write. If an angel typically writes a 25K check, we're writing 100 to 500K checks and catalyzing those rounds and making sure that a founder can really have viability as a round that's going to close, so that smaller angels can really participate and come on board with the knowledge that this round is happening, so to speak. And so Yoko and I really adapted quite a bit during this stage because we were brand new at the start of COVID, and so we've even been pooling and investing our own funds, and then leveraging venture partner relationships with another fund to be able to really continue our work while we raise our own capital from outside investors to really sort of bring our full portfolio vision to play. But that is to say that there is a lot of recognition of talent here in the area, that more funding can really make a difference in creating some terrific opportunities and not making companies have to sort of herd cats, so to speak, at quite as much when they have sort of an anchor in their early rounds. That, again, like Kirby said, it's not about investing in traction. It's about sort of understanding where a team is trying to get to and believing that that is a destination that really is important and that they have a fit to get there. And that you know, given the right amount of capital and resources, that the team is really the right team to attack that problem. So it's really the combination of those two things rather than sort of too much focus on traction, although traction is a good signal, but it often, you know, is not the key signal. You know, so I agree with, I sort of double down on everything Kirby said. And that's just sort of my addition to the top of what he contributed about micro-VCs.
Can you talk a little bit about when you started and what checks you've written? And
so we did
that?
a lot of groundwork last year, really talking to and interviewing first-time fund managers, because it is a really arduous journey to go from deploying your own capital as an angel to having outside investors a investment thesis and a portfolio strategy that really you're moving forward on, and then deploying capital that way. So we did a lot of background work last year and worked together quite a bit. This year, as First Row, we made an investment in Humanly, and really excited about what they're doing. We continue to have a really exciting pipeline of not only some Seattle companies, but companies in you know, Austin, New York, et cetera. But we're really grounded here in the Northwest. So we'll continue to make investments here in town, but really not having a problem meeting founders over these sort of distance communications, and we're really sort of gaining a comfort with how to go through the process using these kinds of tools. So we're really sort of leveraging what other people are learning about how to do that and not letting it slow us down on meeting founders. Our check size right now is either 25K or so-ish when we're writing a check out of our sort of current pooled funds before we actually have our first fund raised. But then in the capacity of venture partners, that check can be $300,000 to $500,000 depending on the opportunity. But yeah, so those are the kinds of check sizes that we're looking at and catalyzing rounds right now. You know, just still in the midst of getting started. And so we're very much sort of new on the scene in that regard.
Cool. Well, it's nice to see you making traction, even though everything's disrupted. Brianna, can I ask you to tell us about what you're working on? Minda, can I get you to mute?
Oh.
Yeah, you unmute
All
and
right.
talk, and you unmute. Yeah, look at that.
Yeah, well,
It's
I'm
Minda's
outside.
fan.
I'm not going
not
to
your
sit
fan.
inside on a beautiful day. I've been on conference calls all day long. Well, hello, everyone. First off, I just want to say it's really great to see all these friendly faces from the ecosystem here on this call. It really takes all of us working together and to help get these companies funded, and that's something that I just really enjoy about the work that we do. We've been extremely busy at Keiretsu Forum here over the last few months, pretty much pivoting everything we do online, and it's been really beneficial. So there's a lot of silver linings that have actually come out of this whole experience, and we're seeing companies get funded, and it's been great. So it's really kind of an exciting time as we are in different. All the technology that we've been funding for the last 15 years is really coming to a head right now, as we're going to have to leverage technology even further as we continue to go forward.
Yeah, can you talk a little bit? You know, there's really some significant things about what Keiretsu does that's unique.
Sure, happy to.
And I'd sort of like you to
so
talk
we have,
about that a little bit.
I run the Rockies and the Northwest region. So we have 6 meetings that our companies go through, and there's a very specific funnel that is very much member led. And we help facilitate funding in companies really in Series A, B, and C.
Bing, and then
You got
we
a pause for me?
a pause.
Okay.
There you are.
And then
now
we'll
you're
do,
back.
and if
You got
they
an
have,
A, B,
and
and
if it's a
C
great
rounds,
company
and
with an
that's where you'd
experienced
start
CEO, we
there.
will look at a late seed stage company, but we're not going to be the first checks in. So typically we look at serial entrepreneurs, experienced
Right.
in exiting and returning capital to investors. And we typically diversify a bit, but we help provide a service to companies to streamline their fundraising process once they get invited to go to our roadshow. So I have a full-time staff of 6, 7 now that helps our companies fundraise and get to the dollars that they need to get in the bank to go do what they do best, which is build their business and not be out fundraising endlessly.
Yeah, cool. So can you talk a little bit about the percentage of investments that Keiretsu is
I think
making in
last
medical
year our
versus other
percentages
things?
worked out to be about 42% life science, and I think it was 38% technology, and then peppered in there was some consumer products, clean tech, fintech, some other sectors. But we primarily do a lot of life science and technology investing. And last year our
Right, but
last year our investors
out.
Put in 54 million into 83 companies here in the Northwest region, and this year we just calculated all of our Q2 data and sent that into PitchBook, and we're at about 20 million right now. So we've seen companies getting funded. There's a lot of dry capital. COVID has actually opened up a larger market for us in terms of all the family office relationships that we have across North America. And we've been able to really leverage those family offices to come in as well. Because they want to diversify, and there's a lot of money to be made in down markets. So they're looking to jump in, they're looking for the support, the due diligence, and really the camaraderie. One big change we've made this year is we've restructured our membership, and we've actually broken it out into mindshare forums. So we've broken our members out into small groups, and we're rolling that out right now where they can meet in groups of less than 10 on a monthly basis, build relationships with one another, and be able to talk about kind of the hard things going on with their investing and how they can support one another. And those are completely confidential. So we've been building that out here over the last couple months as well.
Don't you have something you're doing that's
no, our family
around
offices are just our
offices?
investors, just like our individual investors. Oh, Nathan,
Okay.
yeah, Nathan on the Keiretsu Capital side, yeah, they do some family office events, and I've been rolling that out here virtually as well over the last couple of months. But a lot of our efforts have gone into taking all of our in-person events and everything that we did in person and converting it to online and making it as a professional experience as possible for not only the investors, but the entrepreneurs.
Right, but what I was trying to get you to is there's Keiretsu Forum and there's Keiretsu Capital.
Yeah, Keiretsu Capital.
And they're focused in different ways.
It's not no.
And
so
when
I run
Keiretsu
Keiretsu Forum, and that's what I do. Nathan runs Keiretsu Capital, and that's really our funds, and they do top off rounds in companies that have most of their round in the bank, have Keiretsu members in and due diligence complete. And the screening committee votes them in. The first 3 funds have all been deployed, and the 4th fund is still deploying capital, but I don't know how much many more investments will go into that. Yeah, thanks for having me.
Right, good. Thank you so much. So, yeah, glad to have you. Rick, can you tell us about your efforts?
I can, if I'm up and running. I'm Rick representing the Alliance of Angels today. We're a 25 and actually 26 year now angel organization of the Pacific Northwest. So one of the largest and oldest entities. We have a membership of 140 members. We're actually capped at 140 members with a weight pool, and that's by decision of the board to cap our membership to keep it a little tighter and more focused. Our members are quite diverse in background. Many of us are entrepreneurs. Some of us have been founders as well as entrepreneurs. And then, of course, along a large swath of industry coming in. We like to think that on our bench, we've got someone that's been involved in just about any industry you could find. And as such, our investment interest is quite widespread. In fact, we're agnostic. The slide prior hinted that we were tech only, but that's not really true today. We've got significant membership as well as investments in life sciences, some energy companies, consumer products, really whatever happens to come in the door that seems reasonable. The filter, if you will, is Pacific Northwest. So if you are Pacific Northwest, we're very interested to hear from you as an entrepreneur. And if you're not, we're happy to refer you to other ACA organizations elsewhere in the country. We do both pre-revenue and post-revenue. Oh, I'm sorry. ACA is the Angel Capital Association, and that is a national entity that so loosely keeps track of what all us individual angel groups do. We all, by default, have a membership there. They do run some national programs and meetings from time to time. Great way to network from here up in the upper left corner of the map, for example, to elsewhere in the country if we're looking for like-minded people that happen to live in other cities and do other things. Our investments in the year, we do plus or minus 10 million in a year, and that's over several dozen companies that end up through our funnel. We run a monthly screening cycle. So about every month, a new pile comes in the top of the funnel, whittles down through screening committee, main member luncheons, and which of course are now Zoom, due diligence, and we like to make a decision within 6 weeks from start to finish. About 30 companies a month come in the top of our funnel, and 4 or 5 of them go out the bottom of the funnel. Some with checks. We're a member first investment organization, meaning the individual members, while we diligence together, we make our own independent and individual investment decisions, both in or out, as well as magnitude of checks. It's been an interesting few months, as you might imagine. We're a large train, and we were barreling along until about the 1st of March with a very structured program and a very structured meeting schedule. And it was quite an effort, successfully though, to convert that train to all virtual. So we now do our screening, our main member pitches, our diligence. It's all via Zoom, and we're actually experimenting with Remo for some networking work, which I happen to like this package. It works great as a backup. So good choice, John. The other thing that I've noticed is we used to do some in-person educational sessions and in-person company mentoring, but beyond the money, angels do a lot of mentoring and support and coaching. And at AOA, we do a lot of that as well. We used to run about 10 formal education programs a year, about 1 a month. And it seems now we're doing 1 or 2 a week. It's just incredible, the amount of activity that we've taken to. And I would suggest that we're not going back to where we came. We'll probably have, we'll get a vaccine, we'll go to meetings again someday, but the magnitude of the work that happens virtually today, there's no way we're going to stop that. We're gonna have to just keep that going.
Right. So were there any other things that ended up on the slide that you want to reframe a little bit? You're not just tech. I saw Dan say something about being
I will elaborate on
half
that.
Seed kind of thing.
We can use the vocabulary of pre-seed, seed plus, seed gold, seed platinum 2A. Put a name on it, what you want. We will look at any deal, pre-revenue or post-revenue, that has a rational valuation that treats the investors fair and the entrepreneurs fair. Oftentimes, though, that is pre-seed, called pre-seed, and it's in the hundreds of thousands of dollars, and it's to get a company stood up and get going. We'll look at those deals. Historically, we've done larger deals, but now we're agnostic in deal size. We're agnostic in where the company is in state of revenue. The only thing we're focused on is Pacific Northwest companies, and of course the diversity of our membership reflects that. We're not just a bunch of tech guys anymore. We're from all industries, and it's really a wonderful group. Thank you.
Cool. Thank you. Jim, can you tell us about SWAN a little bit?
Hi, John. Thank
You're
you
on
for
mute.
inviting me. And hearing everybody else, I've been a member of Keiretsu, Puget Sound, Alliance of Angels in E8. So I really enjoy the Pacific Northwest with the angel community, and they're very helpful. SWAN was started about 4 years ago, SWAN 1, and it was a member-only group. And the primary purpose is I wanted smart people around me because I'm not that smart. And I learned in Wall Street, if you have smart people, you're going to make more money. So I think that analogy is true and it's continued. We only invest $100,000, but we usually ask for a board seat if it's possible. We have a sidecar that goes up to $1 million. And so SWAN 1 was very successful. We made 8 investments of $100,000 each, and our returns currently are about 4.5 times. And SWAN 2 is 35 members now, and we're up about 1.8 times with 6 investments. We still have 3 more to go. And it's, again, member-oriented. There's no success fee for me or anybody else. It's what you put in and what you get. And for this year, we've already had 2 exits. Unfortunately, they were too quick, in my opinion. And so we're starting SWAN 3 in November of 2020. But in the interim, I'm also starting SWAN Venture Capital Fund, which is primarily for the Japanese CVCs. And we may not invest in the same companies as SWAN, the SWAN Group. But if we do, our minimum investment for the SWAN Venture Fund is $250 to $500 in a seed stage. And in Series A, we'll put in between $500 to $1 million. And that's how we operate. We talk to a lot of our VC friends in Europe, and we try to bring them in on the Series A stage, which we've done for some of our SWAN companies. And so it's been exciting. We see a lot of activities. We tend to see between 60 and 70 companies. And I appreciate the angel groups that I've joined because they add a lot of flavor to us. We're 70% Pacific Northwest, including BC. And looking at our track record right now, SWAN 1, I would say, was about 10% medtech and pharma. SWAN 2, I would say, is now 30% pharma. And so, but we are industry agnostic, and my SWAN institutional fund will be industry agnostic. We get a lot of queries from our Japanese LPs, and it's always about, they're not very familiar with the Pacific Northwest. Everything else is Silicon Valley, or last year was all Israel. So we have to go up the curve, and we're trying to tell the Japanese institutions, you ought to come to Seattle. We have a lot of companies here. And so we've had a very successful company that started 4 years ago called Define Crowd, which we came in at 3 million. The post money today is 300 million. And so that's taken notice. They opened an office in Japan. 5 of the companies we're invested in had put in offices. So we've had about, I would say, over $20 million worth of interest by Japanese companies that have helped the ecosystem here. And we want to continue.
Cool. Anything about the other groups in the framing between
Well, the
where
other
you
groups
fit
have been
in
very
the
helpful.
pieces
I
that you'd
enjoy
like to
being
say?
a member of the 4 companies I've mentioned because they add a lot of flavor for me. But we also have our own sources. We go to Utah for medtech companies. We're talking to people in Boise that helps us. And so we're just looking at the whole landscape, and it's been very exciting. We're now talking to the Austin Angels, which has a great, I would say, track record, and also a lot of interesting companies. But we're trying to focus primarily on seed at the really early stage area. So we take, I would say, bigger risks rather than what the most corporate VCs want. They're looking at Series C, and they're happy with 3 times return. I'd rather take the risk and get higher returns. So a lot of my Japanese CVCs are risk adverse. They want us to take the first plunge. Cool. And so when I joined and came here in 2001, when I retired, I was like a kid in a candy store. And so the first year I invested in 22 companies. And so that was a real big mistake. So I learned my lesson. I don't think I'm anywhere near, Dan Rosen or anybody else, but unfortunately I'm at 66. But this year I had 3 exits, so I've recouped up all my money. So I have more ammunition now. So I'll listen to my friend Jeff Kane, and he'll tell me what to invest next, as will Dan and everybody else. So it's been a great ride, and I'm enjoying it. And I'm looking forward to more people telling me which companies are great, because it's open season for me. Thank you.
Okay, cool. Thank you so much. If you could turn off
Sure,
your mic
thanks.
and camera, I'm going to try and get the other folks on stage. So can I get all the people that didn't speak to try to turn on their mic and camera and see if that works? And if it doesn't work, could you say something in the chat to me?
Hi.
There's Yoko. Hi, Yoko. Look, hi, Timothy. Good. Oh, had Timothy, Peter. So we have Eric coming, please. And I don't know, Dan Rosen, do you want to come on and talk some more or no? You're welcome to if you like. And yeah, I think that's all that we have. If somebody is in on the wrong email address and so doesn't have speaker rights, please contact me in the chat and I'll look while we're talking. So Tim, you have a MicroVC that you're working on. Can you introduce yourself and talk about it a little bit and talk about how this transformation over the last 4 or 5 months has changed?
So yeah, I'm Tim. I'm the managing partner of Essence VC. So I'm probably the smallest MicroVC that we have here. My background is definitely been an engineer and then been to an operator, a founder. Sold my company to Cloudera in 2018 and moved back to Seattle. I was in Seattle for a while and then moved down to California, the Bay Area, and moved back to 19. And yeah, raised my first fund end of 19. So I've been deploying my capital since December up until now. Yeah, so I write 25 to 50K checks. I raise just 1 million fund. Essence.
What's the name of your entity?
So I'm
Essence.
My fund is probably a little bit different. I'm a specialist fund, I'll call it myself. So I do pre-seed and seed, but I primarily invest in specific verticals. Particularly in my case is sort of AI, machine learning, and infrastructure companies. That's my main focus. I do occasional AI SaaSes, but I don't touch consumer. I don't touch hardware or healthcare. I do personal angel investments if there's something really interesting from my personal money. But from the fund, from the setup, I've been telling my LPs that I'm going after companies that I have the most background for, and co-invest basically with strategic partners and friends that either is my investors before in my company or other partners that have been working quite a lot in the last 3-4 years timeframe. Yeah. COVID. I think I invest in Seattle, but I don't only invest in Seattle. I actually invest quite a bit in the Bay Area and also quite a bit in like Israel, in New York, and different places. So to me, I've seen it impacted different areas differently. I think the Bay Area hasn't really, probably impacted a little bit, but it hasn't really changed that much, especially for like a lot of the top tier funds. So actually right now, it seems like nothing had ever happened, which is, it's just, I was just looking at founders and looking at companies a little differently, but from I would say 80% of how you think about a company, or 90%, is mostly the same pre-COVID and now. So, yeah.
Okay, and we sort of have like flying fish that's sort of a layer above the group that I've identified, and so I think of them as sort of AI focused. Can you sort of compare and contrast yourself for
I think
investments versus
flying
theirs?
fish and definitely focus on AI but then an AI that applies to any vertical. I'm more enterprise focused, like selling to larger enterprises and typically more technical products, technical audiences as well. So I think every fund, especially when it comes to like a micro or smaller fund, definitely are very different, basically. I think everyone kind of invests in things that the partners have sort of unique ability to assess or unique ability to source, right? And yeah, so I know a lot of funds. Some of them do AI with something else. Some do AI with blockchain. Right? I think Flying Fish definitely is more like AI focused fund that can do consumer, enterprise, and everything in between. I'm more enterprise because that's my background for the most part. So I think that's it's more of my fund size are quite different as well. But focus, there's some overlap, but probably very little, I think. Yeah.
Yeah, I think you have a much tighter focus and use a very different mechanism of finding companies.
And also not
so
Seattle.
I think there's dramatic differences
so that's
there.
Big difference. Yeah.
Right. And you're international.
Yeah, well,
where they're not.
We haven't tested a lot of regions yet, but
yeah.
So far 2 continents. So I guess I can call it international. We'll see. We go down that.
We should have a conversation about slush at some point, but not now. So, Yoko, can you tell us a little bit about
well, I think Minda covered it pretty well, so I won't add a ton because I think there's a lot of other great folks to hear from here. But I think, one of the things that I wanted to add about the COVID days that I don't think has been mentioned, one thing, a lot of folks have talked about moving a lot of things to remote, and I think that's been really fantastic. As one of the thematic areas that Minda and I look at is in the future of work. I actually think it's been really a wonderful opportunity to see a lot of things accelerated. So, in terms of a company that was kind of planning on doing some plodding along, it's like, oh, actually, there's a real interesting opportunity here to get a lot of feedback. I'm a product person, getting people in, getting all that feedback and being able to act on it quickly is exciting to see, despite everything that's going on. And I also think on the flip side too, because we are literally placed in each other's homes now remotely, I do think that it's been great to see a little bit more of the human connection and some of the empathy show up, right? I think we are all dealing with a lot more than we had ever anticipated for this year. And so I'm thankful for, I think it's been said a number of times, but this is a really great community to be a part of. And I think we've seen that shine through during this time.
Okay. I know that you guys tend to hang out in certain places. Can you mention that a little bit?
So we used to, until we went into shelter in place, we used to hang out at WeWork Labs. Minda would also spend some time at Create 33. Also take meetings over at the Riveter when they had their space. So, we try to we were nomads to begin with. And now we're just in our home offices permanently for now.
Aren't you doing mentor offices?
Yep. We're still doing mentor office hours
still
and we're also doing workshops and continuing with the content and educational side of things as well. We're doing a workshop for WTIA. We've done a couple of fundraising workshops for WeWork Labs Emerge program for underrepresented founders. We've also some really fun content, I would say, sort of based on the Angel 101 content that Seattle Angel Conference does for folks who are interested in dipping their toe into angel investing. Minda and I were fund managers for SAC for a reason. We're really excited about bringing more voices to the table, and we're continuing to find great opportunities to do that.
Cool. Thank you so much. Peter,
absolutely.
Can you tell
John,
us about
thanks for having
SeaChange.Fund?
SeaChange.Fund is an annual fund that is actively managed by our members. And before John asked me to explain it, I'll take the liberty of doing it myself. What that means is that at the end of the day, all investment decisions are made by our investor base. So to kind of simplify it, I'd say from the outside, it looks like we operate like a VC, but kind of on the back end and internally, it's all investor and member driven. As for check size, sweet spot is around 500,000. Industry agnostic. Our only restrictions that we placed on ourselves is investing in the Pacific Northwest. So Vancouver down to Portland and as far out as Bozeman. I think that's our record eastward. So yeah, and as for COVID, I think, we saw some kind of hindrances of deal flow, not in terms of frequency, but definitely in terms of quality. I think we had good conversations with companies that we had a lot of resolve and kind of consensus that we should do the investment, and they've held off from raising rounds out of kind of fear of the unknown and fear of macroeconomic environment. So deal flow is still good. It's starting to recover, but yeah, I think we're all adapting to the new normal in some way, shape, or form.
Yeah, all right. So one of the things I think is important when you move from angel groups that are groups like AOA, Alliance of Angels, is an angel group where the members lead the deal, where you're different as an angel group, where you have a fund where the fund takes the money first and then decides where to put it later. And so AOA and many of the other angel groups are see the companies first, filter the companies, and then the money follows, where you raise the money first. But with the venture capitalists, they're not raising annual funds, they're raising like 10-year funds. And when you come into a venture capitalist at year one, you have a different attitude from the venture than when you come in at year 8, right? And because you're not coming in at year 8. And so can you talk a little bit about what you mean by annual?
So we
fund?
raise
And
from individual investors
two comments in
every
there that
year.
I'm looking for.
And in that fund, we will allocate roughly $500,000 checks to around 8 to 10 companies. So there's fund management, and that's my colleagues Will and Susan, and we do a lot of the organizing, kind of lead due diligence, lead deal origination, and we bring in members at the time of diligence to diligence a deal. So if we're looking at a cloud infrastructure company, we will reach out to our members and leverage them on the diligence process to use their domain expertise to better evaluate the deal. I know that's kind of dancing around the answer, but I'm kind of, if you can kind of elaborate on what you were looking for in your question, I'd be happy to answer.
Well, so because you're an annual fund,
right?
You're writing a specific number of checks on a regular basis. You know what money you have, you deploy it over the year, and the next year you're back at year one again, doing it again and doing it again. Where the kind of company and kind of money I deploy in an angel or in a venture fund changes as I move from year 1 to 2 to 3 to 4 to 5, and I'm fully deployed at year 5, so I'm not writing any checks out of that fund. Now I turn my attention to raising money for the next fund. And so
absolutely,
you get a different heartbeat among them. But thank you. You've made some interesting investments.
I think
you want to highlight one of them?
I'm most excited about, I can't talk about too much. They're a YC company. They're still in stealth, but we might see them, I think, at demo day this year. We're really excited about that one. And then on top of that, I think we've had a lot of luck out, east of the Cascades and finding some very, very interesting companies out there, notably MedCurity that does a lot of, it's a very simplified product for CISOs and healthcare to kind of walk them through security risk analysis, so to test their HIPAA compliance factor.
Cool. Compliance is a boring but profitable business. All right. Thanks so much.
So,
Eric,
so I
can you
am
tell
the
me
fund
about
manager
your
for
efforts?
Seattle Angel Conference 18, following in the esteemed footsteps of many of our alumni like Yoko and Minda. And so just trying to focus primarily on increasing the diversity of both investors as well as startup companies that we have this year. Given the COVID crisis, our last go round was actually hosted entirely remotely. And because we had such success with that, we decided to extend that further during this conference. And so we've actively begun reaching out to both investors and companies outside of the Seattle metropolitan area, outside of the Pacific Northwest even. And so in doing so, we were able to attract a lot of non-traditional companies that I think many of the VC community here in Seattle probably haven't seen, such as more consumer goods products, for example, things that are made on the East Coast, some healthcare companies. So we have an exciting lineup that we're getting ready to unveil as we ease into our season here towards September. And so I look forward to sharing more with everybody about that as the date approaches.
So can you, maybe talk a little bit about the process and how Seattle Angel Conference is fundamentally
for sure. I think as Elaine's slide indicated, we're kind of the earliest of the earlies, so to speak, and that we're dealing with very early stage companies that are probably raising their first round outside of friends and family, as well as we're also dealing with, in many cases, a group of angel investors that are not very familiar with angel investment. They want to get into angel investment. They want to be a partner with and be mentored by other angel investors. And so our mission is really to bring those investors together, the experienced along with the novice, in order to create a larger angel investment community, predominantly here in the Pacific Northwest. And obviously COVID threw a monkey wrench in those plans. And so we're now looking at ways to continue to grow the base of angel investors that are available to us, but we're not being quite so persnickety about drawing the line at the King County border. Yeah.
Not that we ever did King County border, but Northwest was primary. And we have 2 cycles a year. And so this is one of 2 cycles. So every 6 months we do a cycle, and maybe we invest in 1 to 3 companies, and it's somewhere between 100,000 and 200,000 in each of the companies that we choose. So thank you so very much. I think we've hit everybody who is here. I was planning to put everybody on stage and do a Q&A. What I think I'd like to do is have everybody drop off. And then if any of the audience has a question, put it in the chat, and then I'll try and call the appropriate person in. Well, and if they're sort of general questions, that would be great. And then we'll just answer a couple of those and then break up into tables and can mingle and go to different places. So are there any audience questions of any of the groups that presented? While people are thinking and typing in the chat, I saw Yohei here from Untapped Ventures, but I don't see him now. And so if he's here now, turn on your mic and camera and come on board. Otherwise, they are focused on underrepresented groups, under networked groups. So, yeah. Look at the Q&A tab, I'm told. Let's look at the Q&A. All right. What kind of companies, Amanda, what's seems like defines early stage differently, right? Yeah, so really early stage is defined dramatically differently because we think about the thing process differently. But I think if you think about what traction is and what the milestones are, that'll help. But you really need to talk to each of the companies, find out. Any of the ones that are specific to specific people, I will invite you to engage with them directly. So Minda mentioned opportunities investing in down market. A down market is when sort of the economy is not doing so well and people get laid off. And because people get laid off, the opportunity of getting good people at lower wages is easy. The opportunity to gather up resources goes up a little bit. So investing in angel investments when the stock market is going down. Best way to do that is to bring Elaine up. Elaine, can you come up and talk a little bit about the diversity and equity and inclusion process?
Oh, hi, John. Thanks. It is great because one of the things that we, when all of the Seattle Angel groups share their information, they also share their member diversification numbers. And so it is super exciting to see that here in the Pacific Northwest, a large amount of the groups here have a higher than normal female representation numbers. And from our perspective and a number of the groups that we talk to, they're continuing to look to increase that higher because what they see is that it's a cycle that feeds on itself. So when the female entrepreneurs see female founders on the other side of the table, it just continues that trend. Another great thing that we see in the Halo report is when we look across all of the regions in the country, the Pacific Northwest is also a great place because we fund more female entrepreneurs than any other region. So it's a super exciting place to be. There's a huge number of mentors, both on the entrepreneur side and the angel, as well as the VC side. And it's great to see, what we've talked around the table and those that even aren't here today. So, is there any other specific questions that I could answer?
Well, let's dive into that a little bit because diversity, equity, and inclusion includes more than gender bias or a gender lens. There's a bunch of other possibilities. And I know that, we work really hard to get a much broader representative group, and it's incredibly difficult to find a wide array of angel investors or people who are interested in angel investors from the Hispanic community or the African American community or the Southeast Asian community. We have reasonable numbers of Chinese and Indian, but not reasonable numbers Thai, right? So our ethnic diversity is somewhat stilted, and even with intention of trying to get them, it's difficult. Where as a data person would you be looking to find out where our diversity, equity, and inclusion is succeeding or failing?
Oh, it's a fantastic question. So as I said in the setup, the Halo report just and what's super exciting is that last year they did a dive into gender, and because there was such positive feedback, this year they did a pretty large section into gender and ethnicity. So I would actually point folks to that Halo report. I could probably pull up this recent slides and talk to you about that, but it talks the minority CEOs, regions, and how regions are doing in terms of funding minority CEOs as well as female CEOs. So I believe that there is a greater awareness within the organization that you don't improve what you don't track. doing a fantastic job of bringing more of this to light, so we as groups can see that, incorporate the insights, and then build on that.
Cool. Thank you so much. I know that we've been making explicit outreach efforts to try to reach into different communities. I assume that that's true in some of the other groups. If any of the other groups want to speak to this, could you turn your mic on and come on stage? All right, so I'm going to take that as a pass. And so I see here, can you talk about who developed your VC thesis? So angel investors should have a thesis as well. And that's one of the things we work on in the Angel Conference, is for people to get their own investment thesis. But Minda, would you come up and talk a little bit about how you evolved from being on the entrepreneur side to being on the angel side to being on the VC side?
Yeah, sure. Absolutely. So, you know, I think I was in my operating experience, I would say I was just always chasing a place where I felt like I could maximize the input that I gave toward the outcome of the company. And that took a lot of different forms. It was very sort of like fun and exploratory, and being a co-founder or being an early team member and things like that. And so as those data points turned into a career, then as I looked into angel investing, it became, where can I really be useful and valuable in understanding where soft signals might really relate to progress. So it sort of meant like reading backward and sort of trying to transform my experience into wisdom. Not necessarily true, but that was some of the objective and thinking. As Yoko and I came together and formed our thesis, though, I think that's been a really fun exploratory process, professionally, personally, because what it meant was really looking back at where do we think, looking back to look forward. And that's how we really formed our investing thesis. So not only was there sort of the portfolio strategy part of it, which is sort of a little bit more sort of like, how do the numbers work in our favor in terms of number of investments and check size and some of those kinds of things. But from a sector perspective, we really looked back at where do we have the ability and capacity in our past professional and lived experiences to be able to really dial in on things that we want to laser focus on, and then what are we good at filtering in and out as things come through our network. So our top of funnel being really broad, you know, how do we filter things, but also really honing in on areas where we have a very specific opinion and a point of view and are really looking outward for something. And so I think that because I came into it and Yoko came into it with, you know, a lot of career background, we really looked at it from sort of thinking of our background, whether it was investing or taking on operator roles, as sort of data points that could inform what we might be really apt to, you know, see early, so that we would know that first investable moment and be able to make good decisions, because our objective is to return investor capital at a multiple, and we take that really seriously. So we look at where can we really be excellent at not only finding something good, but helping it get to the next step.
So, you know, we have Tim on one side who's doing AI, but no, that's too broad. He's very, very focused on technical AI, very specific, sort of taking it to one extreme of doing what you know and who you know. And on the other hand, we have several funds where the funds are industry agnostic and they're slicing for some other different meaning of good company, right? And so I would argue that you're sort of in the middle, not completely industry agnostic, but not quite so nailed down to a very specific thesis, right?
Well, yeah, I would say that, yeah, I mean, we are not a generalist fund, but what we are is a fund where we don't see, you know, we see that the way we look at it is that we focus on 3 enduring human traits rather than identifying a business model or a technology that we're looking for. And within those 3 human traits, which I can go on and on about, we really look for what are technology solutions that are scaling interesting things in those spaces. And so we really look at it first from a human insight perspective, and founders that have those big unlocking perspectives that really sort of create, exciting innovation. And we look for places where technology is the differentiator. So that's sort of like, instead of saying we focus on, AI and machine learning and cloud, it's saying we look for insights in the way that people connect and the way that they connect maybe for transactions specifically. And so then it starts to look like, well, who has insights in those areas and is using technology to bring those to scale. So it's just that, and that was a part of us getting to know how we thought about investing and how we looked at opportunity, that we didn't see it from a tech first perspective. We saw it from a solution where tech was the scaling factor. And so going through this process was really wonky and fun, and still is. And I think you have to really enjoy that part of the journey in order to be differentiated and to really understand who you are and bring to the table, which I think is key to MicroVC, is that it is really about the expression of your excellence at a particular area, and really defining what that is and drawing a box around it is what allows you to really do the job of working with both sides of your constituencies, which is the founders who need to find you and you need to find them, and same with the investors that want to find you and want to be part of your journey as well. So being really focused on those things has been something that has made a real difference for us in everything we approach.
So they asked the question, what type of companies does Minda invest in? So can you name the three things and be focused on that?
Three
so that
C's.
Everybody knows?
We say 3 C's. The first one is how people connect. And that means how they connect with each other, sort of like a new town hall, whether that's for social interaction or some sort of community building or for a transaction. And then the second one is contribution. We think of that as like economic contribution that you make. Who are you as an individual, as an economic contributor? So you could call that future of work, but we really see it as who is the individual at work and how are they, how is their superpower unleashed through technology? And then the third part is choice, the third C, consumer choice. How do you tackle the abundance of consumer choice? What are all the ways that our consumer experience is being digitized? And in each of those three cases, how is technology working for the individual instead of targeting the individual? So we're looking for insights across, those three areas. And so I know that can sound really broad, but it really does come down to how people live their daily lives and increase having technology work for them and not target them. So for example, that excludes ad tech, even though that might sound like the digitization of the consumer experience. But in fact, we do have some definitions that we've really worked through in terms of what we filter out and what we pursue and what we, how we evaluate things at the top of our funnel. So 3 C's.
Right, but and that strikes me as a sort of, instead of slicing in terms of the segments, you're slicing across, which sets you up as being fundamentally differentiated from everybody else. And so one of the things you might talk to with people at your table is what difficulties were between being an angel and doing the angel fund thing and being a VC.
Oh, absolutely. Yeah.
But
happy to talk about like the differences because I do think that they are different, but I think, most fundamental to it is that, you're investing other people's money. And I think you have to really understand that there's a lot of administration that comes with that. There's a lot of responsibility that comes with that. And there's a lot of planning that comes with it. And that the angel investing is really sort of, so individualized and personal, but, we really enjoyed making that transition from taking angel skills and then learning a whole bunch of new skills that we are as VCs. And so the mentoring that we've gotten from the VC community to sort of make that transition has been outstanding. And, it's an ongoing thing and we're really having a good time with it. It's been really an interesting transition to learn the different ways of thinking and evaluating that we've come across that have changed how we think about, these early stage companies.
Right. Thank you. I'm going to ask you to click off stage, and then I'm going to invite someone else up. So Kirby, could you come up to the stage, please? Do I have Kirby still? Kirby's still on, it says. So Jim, can you come up the stage and talk a little bit about sidecar funds?
Yeah, John. Can you hear me?
Yeah. So you mentioned doing sidecar funds,
right?
And people wanted a definition. Can
Sure.
you talk a little bit about how you interact with them and how they're different than any other regular fund?
Well, no, what sidecar funds for us are when a SWAN has only a maximum of $100,000 that we will invest in any particular company. So we want to give the investors in our group an opportunity to invest their own money besides the fund. So our members put in anywhere between $25,000 into the fund up to $100,000. We do not take more than $100,000 from our investors. So we have 35 members, and some put 100,000 in, some put a minimum of 25. So when we have a very interesting company, we give the opportunity to our investors to co-invest in the fund. And so by doing that, the company we're investing gets additional funding from us. So we've done a maximum of up to $1 million, but on average, we have guys who don't want to put more, we don't do more than 100,000. It all depends on the attractiveness of the company.
Okay. Thank you. That works. Do you want to mention anything about how you're managing deal flow now that you're locked in your closet?
Actually, we have more deal flow now than ever. And quite candidly, Zoom, Microsoft Meetup, everything has helped us with more companies. And we have more time because we don't have to drive to Seattle. I love Zoom.
Right.
My only problem for me is my Japanese LPs, they like a face-to-face. And since we can't fly, they're not really happy with Zoom. The corporations aren't, but companies, there's no issue. I see more companies today than I do driving in, so I kind of like Zoom.
How are they finding you?
I think it's word of mouth. Nate Dorn, who's our business development director, a lot of companies call him. I think it's reputation. But at the same time, being a member of a variety of angel groups, we look at what they have. And so I have to say that it's helped being a member of all these groups. And I don't want to plug any group particularly, but looking at the Halo announcement, I saw that AOA came in second and E8 came in fifth. So congratulations to two of the Pacific Northwest funds that have really done well. So I'm glad to be a member of those groups also.
Yeah.
Not trying to plug them, but I think I have to.
Yeah, fair enough.
Sure.
Thanks so much. So Gary, can you come up on stage for a second? You have to hit the mic, turn your mic and camera on. Thank you. How has your deal flow changed in this new environment?
I would say slightly down. Not much, but maybe a little bit.
So how do you're the most prolific guy I know, showing up at every meeting that we have that has anything to do with startups, and yet we're not having meetings. So you're not coming to our Zoom meetings. So where are you getting your deals now that you can't go mingle at the coffee bar?
Word of mouth.
So
being around a long time.
Other people. Yeah. All right. Fair enough. Anything you want to tell me about how things have shifted between November last year and now?
Well, we survey the members at the end of the year, and they have to report what they've done. And I've heard a few people announce that they're real busy. I can tell we're not quite that busy right now, if that answers the question.
Yeah. It felt to me like you were down a little bit, where some of the other groups are like twice as many. So that's why I brought you up. All right. Thanks so much. Can you turn off your mic and camera?
Yep.
So I think we're running out of time a little bit. So what I would like to do now is to switch to the tables. If you double click, you can move around to the tables. If all the investors would move to the table with their label on it, and then if you want to talk to them, go to that. If you see that the table is full, that you've got 6 people in it, please leave and leave a space for someone else to come in so that we can move it around. And then I will call you back after, let's say 30 minutes, and then we can chat a little bit more. So please go mingle at the tables.